Your brain has one mission in the markets: to protect your ego, not your account. That's why you move your stop losses. It's why you add to losing trades. It's why you can't sit still when you're in profit. Your brain isn't wired for objective decision making. It's wired for survival. It would rather feel right than actually be right. And until you learn to rewire that instinct, every winning streak will end the same way, in self-sabotage. Now, in this video, I'm promising you the most comprehensive guide on self-sabotage on YouTube to date. So if you find this useful, make sure you like, you comment a supportive comment, and subscribe to the channel. And make sure you also go into the description and download the free Bulletproof Your Trading Mindset 2.0 tool. It's going to come in handy for this video. Now, self-sabotage in your trading comes wrapped in many different forms and many different names. It could be a sense of misplaced identity. It could be the subconscious charges that are still logged there and are running you split seconds before you're even consciously aware of a behavior. It could be in the form of unconscious motives, or it could be deep-seated guilt that is being compensated for with altruistic squandering actions. And in fact, self-sabotage is usually all the above wrapped within each other and intertwined within each other. And that's why I'm going to hit every single one of these angles in this video, and I'm going to show you how you can unpack what self-sabotage is and how it's being made manifest in your trading so you can have more control, have more self-awareness, and stop the self-sabotaging behavior. You can start to scale up your trading without the boom then bust cycle, and you can start pulling consistent payouts from your trading. Now, I'm going to develop this topic and this understanding, and I'm going to build new layers on top of each of the insights I give to you. So bear with me, be patient, and I'm going to give you some practical tools to uncover self-sabotage. Now, the first topic and understanding you need to have is the difference between reality and actuality. Reality is how we see the world. Actuality is how the world actually is. Reality is framed by our own experiences through life. It's framed by our unique DNA code, our unique physical makeup of the brain, each of our unique life experiences and how we perceive those life experiences, our unique mission and what we're dedicated to, and how all the events we have throughout our life, how we perceive those events support or challenge our value system in that moment. So everybody has a unique reality, a perspective on how they view the world, which is actuality. Now, the greater the incongruence between reality, how you see the world, and actuality, the greater stress, emotion, and for your trading, staying in the boom and bust cycle. Being a consistently profitable trader is aligning how you operate to how the market operates. And in actuality, I'm going to show you how the market operates, by what rules the market operates, so you can get those and download those into your own reality so that you can be congruent. Because remember, it's the incongruency between your reality and actuality of how the market actually operates that creates your stress, your emotion, and it keeps you self-sabotaging, keeps you stuck in the boom and bust cycle. Now, in actuality, consistent profitability is two-sided. It encompasses both winning and losing. It encompasses winning streaks at times and drawdown at times. It encompasses being both profitable and unprofitable at times. It encompasses being right, and it also encompasses being wrong. It encompasses being a winner, and it also encompasses being a loser. It encompasses a predictable outcome on a large sample space, and it also simultaneously encompasses an unpredictable outcome on individual trades. It just depends on how broad your perspective is. So in actuality, consistent profitability is two-sided. And it's only the trader who can adjust their reality, how they view the markets, to align with this rule book, that are able to have consistent profitability. Because as we're going to unpack, most traders, the unprofitable traders, 99% of traders, they don't align their reality with actuality. They go into trading with unrealistic one-sided expectations, seeking the unattainable, winning and being right all the time on each individual trade, and they try and avoid the unavoidable, which is loss and being wrong, and they get stuck in a cycle, the boom and bust cycle. Because when they take a few wins, they think they're doing really good. They're profitable. They've finally cracked the code of the market. And then an inevitable loss comes through, and they think they're self-sabotaging. They think something's wrong with them and they spiral. And they go on boom, bust, boom, bust, boom, bust over and over again. The only way you're going to be able to have consistent profitability as a trader is if your reality aligns with actuality, how the market actually operates, the rule book of the market, the two-sided nature of the market. I've had the opportunity to interact with many very profitable traders, and they still have both sides of the profitability. They win sometimes, they lose sometimes. They have winning streaks, they have drawdown. They're a winner sometimes, they're a loser sometimes. They're right sometimes, they're wrong sometimes. But those traders can embrace both sides of the journey, and they consistently stick to their edge, and over a large sample space, they have the predictable profits, which is their edge. Their trading edge approximates itself over a large sample space. Yet unprofitable traders are constantly seeking being right and winning on each individual trade and being a winner. And as a result, when the inevitable other side comes about, they can't stick around. They break their rules, they break their edge, they spiral, they revenge trade, and they ultimately go on that bust cycle. So unprofitable traders, their reality does not align with the actuality of the market. They're attempting to impose unrealistic, one-sided, all positive expectations on the market. They want win without loss. They want winning streaks without drawdown. They want profits without unprofits. They want to be right without being wrong sometimes. They want to be a winner. They don't want to be a loser. They want the market to be predictable, and they want to be able to pull money now from the market on the individual trade, and they don't want the unpredictable nature, probabilistic nature of the market. They're setting false, unrealistic expectations onto the market, and when the inevitable other side surfaces, they get smacked and they spiral and they revenge trade and they overtrade, and then they give all the profits back. They go on the boom and then the bust cycle. So what happens, these traders, unprofitable traders, have unrealistic one-sided expectations to win, the profits, the nice, pleasurable feeling of being right and making money. And then when they inevitably have a loss, which is part of their edge, which is part of their sample space, and they inevitably take a loss, and they're wrong, and they're pained by that because they have so much pleasure here, they've got pain here, they think something's wrong with them, and they think they're self-sabotaging. And now they're triggered. And now they spiral, they revenge trade, they overtrade, they impulsively trade out of FOMO, and they start to spiral. Now, why do they do this? All of this is a last-ditch effort to alleviate the unwanted state of pain and anxiety that traders put themselves in. Because they have such strong expectations of it being a pleasurable, positive outcome in that individual trade, and getting all this pleasure and getting all this profit and R and percentage, because on the inevitable trade, they have an unmet expectation, they're now in pain and anxiety. So all those behaviors, all those so-called self-sabotaging behaviors are an motive, an unconscious motive in that moment to alleviate an unwanted state of pain and anxiety, because they're doing whatever they can to make money back in the market, to get away from that pain. They're doing anything they can to get away from that anxiety and make that profit back. So they just trade. Even when there are no setups according to their plan, they just trade because they know no other way to make money back from the market. So these traders are triggered by unmet expectations because in their mind, actuality didn't align with their reality. And the reason it didn't align with their reality is because their reality was unrealistic in the first place. It was one-sided. So let's contrast this with the top 1% traders whose reality aligns with actuality. They're not trying to seek after unrealistic one-sided expectations of winning each individual trade and being positive and right and winning. And as a result, they're not pained by the inevitable loss or being wrong because they're trading a probability model. They've transcended the outcome-based thinking. They're not expecting this, therefore they're not pained by this. They've transcended truly the outcome of win and loss, and they're focused strictly on their process because they've truly embodied the code of the market, actuality, which is that the market is two-sided. At times they're going to win, at times they're going to lose. At times they're going to be right, at times they're going to be wrong. At times they're going to be profitable, at times they're going to be unprofitable. They've dispassionately detached from the outcome and the polarities of the market, and they just focus on consistently sticking to their trading plan. They're not triggered by individual outcomes because they're not expecting a certain positive outcome. Therefore, irrespective of what the outcome is, they're unfazed. They have a carefree mentality. They execute their edge and approximate the law of large numbers. They focus on taking hundreds, if not thousands of trades dispassionately, not expecting a single outcome on the individual trade, but rather sitting back, dispassionately executing their trading plan and letting the outcome, their edge, approximate itself over time. It's only when a trader can truly embody this level of thinking that they can have consistent profitability. And you can't convince yourself of this. You can't try and repeat this over and over. You have to go and do the work, the mindset work, to transcend outcome-based thinking. And it's only when a trader can truly get to a state of thinking, I truly don't care about the outcome on this individual trade. Win or loss, I am unfazed by the outcome of the individual trade. I am focused on executing, truly focused on executing my plan over the next 100, if not 1,000 trades. It's only when a trader can truly embody that level of thinking that they can have consistent profitability. So the first reason traders self-sabotage is because of that misplaced identity. They set an expectation and identity on themselves that they have to be winning and positive and one-sided all the time. But when they face through the actuality of the market, they get humbled and they think they're self-sabotaging. They think something's wrong with them, as opposed to embracing both sides of the market. Now, where do these unrealistic expectations come from in the first place? Well, they come from the subconsciously stored associations you have in your mind. Our brain isolates emotional experiences, very pleasurable experiences that we become attached to, and we log in the subconscious mind. Maybe it was a previous trading win that was very pleasurable. Or maybe it was an experience through life or through sport or through school, through a relationship that you learned to associate a lot of pleasure to a win. And we also have very painful experiences. Maybe it's a very painful trading loss or a business loss or a loss in a relationship or a loss of someone close, a loved one. And these painful resentments towards loss that we build up, and we associate losing and negative in that moment, and we log that in the subconscious mind. So our brain isolates emotional experiences, painful negative experiences, and pleasurable winning experiences, painful losing experiences, and then it creates a seek and avoid mechanism to try and seek after that pleasure again and to try and avoid that pain again. And this is our survival instinct that tries to seek pleasure and avoid pain. But the issue with that is this survival mechanism is outdated. We're no longer trying to avoid life-threatening threats day to day. And what we're trying to do is just trade the market with proper risk management. So we have to have a way to manage this reaction to seek after pleasure and avoid pain in order to stick to our trading plan and processes. Because if we're constantly trying to seek after pleasure and avoid pain, we're going to run into the problem we just covered. We're going to have one-sided, unrealistic expectations on the market that we're going to project onto the market, and we're going to get humbled by inevitable losses. Remember, consistently profitable trading encompasses winning and losing over a large sample space. But because you're trading an edge over that large sample space, you're going to approximate a slight winning edge in that moment over a large sample space. So we have to learn to manage the desire for pleasure and winning on the individual trade and the desire to avoid losing and pain on the individual trade, so we can approximate that large sample space, 100 to 1,000 trades. We have to learn to manage this seek and avoidance mechanism. And by the way, this programming, this subconscious programming, happens as early as childhood, and we learn to associate pleasure and positive, and we create a search after this and an anti-search to avoid this. And this is our programming that as traders, when we come to the market's going to make us face. The market is a mirror of our own stuff from the past that we have to face. This is why what I cover in my Mentorship 2.0 program and in one-on-one coaching and consulting is we go back and we address this so the trader can be present with the market and truly trade the market, as opposed to trying to seek after this and trying to avoid this. And that's really where they have consistent profitability. And they can manage their own stuff so they can be present with the market and they can trade the market. Now, remember how I said your self-sabotaging behavior is a motive to alleviate unwanted states? Well, what happens because of a misplaced identity that's driven by these subconscious charges, we have triggers. Triggers that when we take a loss, we're pained by it because of our unmet expectation, because of that misplaced identity. So if you're using the Bulletproof Your Trading Mindset 2.0 tool before every trade, You're going to be able to identify those unmet, unrealistic expectations and ground them before you get in the trade so you're no longer triggered. So make sure you download that BPM 2.0 tool. It's a completely free tool in the description, and that tool is going to help you start to dissolve your triggers. Now, remember how I said that your self-sabotaging behavior, your unwanted behavior, is a motive to alleviate an unwanted state, a state of being in pain or a state of being in anxiety because of a trading loss. Part of that unwanted state will be calmed down if you dissolve the triggers, because now you're more embracing of both sides of the market and you realize that this temporary pain and temporary anxiety is actually part of the game of being a consistently profitable trader. But I also want you to find alternative strategies to deal with that unwanted state that don't involve trading. So if you're put in that pain or that unwanted state, you don't have to feel like you have to trade to make that back or to alleviate that, but you have viable alternative strategies that you can implement that help alleviate that pain outside of trading. Whatever works for you. Maybe it's as simple as a gym session, or maybe it's using some of my tools from the Mentorship 2.0 program, or maybe it's having a chat with someone, or maybe it's talking to your accountability partner, or maybe it's bringing up a demo account and doing a little bit of a post-trade review on that so you can extract a lesson from that experience and you can get back to trading the next day. Whatever it may be, you need to find alternative ways to deal with that pain and unwanted state so that you don't default for the self-sabotaging behavior, which is only there to alleviate this unwanted state. If you don't have alternative states, if you don't dissolve the triggers using the Bulletproof Your Trading Mindset tool, then you're going to continuously default into spiraling, taking trades outside of your plan, over trading, FOMO trading, impulsive trading, because that's the only strategy you see to getting yourself out of that pain and unwanted state and making back that money. Now, once you implement all those components, the last little piece that can drive self-sabotaging behavior is guilt. You know, if we have these logged experiences throughout our life where we perceive to have let other people down and hurt other people in our perception, that can lower our self-worth and it can bring our self-worth down. And there is a compensation, an altruistic compensation to low self-worth and guilt. And what happens is we feel like we hurt someone else in our perception, or we feel like we got a better deal than someone else. And what happens because of these logged guilt charges is we feel like we don't feel worthy of having the money we just made or achieving the goals we want to achieve. And so we squander it. And if we do make that money, we find a way to blow it. We buy other people's brands, or we give money back, or we donate money, or we squander it on other people. And there's this altruistic compensation to guilt and shame. So it's also very important to identify any time in the past where you perceive to have caused someone else more pain than pleasure, and become self-aware of where your guilts are and understand that those could be driving your altruistic behavior. So even if you do make money, people think I'm self-sabotaging, but no, you have a motive to squander that money because you don't feel worthy of holding on to it. Building self-awareness over guilt, and then doing one-on-one work with myself or checking out the Mentorship 2.0 to use the proven tools to address that and have a broader and brighter perspective over those experiences can calm down that altruistic behavior. So you actually feel worthy of holding on to whatever you've made and achieving the goals you want to achieve. So traders, this is the overview of self-sabotage. If you got a nugget from this video, I want you to comment below what that is. Make sure you download the Bulletproof Your Trading Mindset 2.0 tool. That's an absolute game changer in helping you dissolve your triggers so you don't find yourself being triggered into self-sabotaging behavior. Check out the Mentorship 2.0 if you want a little bit more. And please share this video with traders that you know will get benefit from it. Subscribe if you haven't already. And before you click away, make sure you check out this video that's going to pop up on your screen.